It's amazing,
Yes.
right? It is amazing what's happening in the market. The smile tells you that you're an happy investor. The warmth in your voice tells me that you made a lot of money. Am I getting it right?
Well, partially, but the smile and the warmth is because I'm with you, Nikunj.
Oh my
Uh,
God, I'm so touched, my friend.
I love coming
That's
on
what
your
I can
show,
say.
and I love coming on your shows, and we have very interesting discussions, and you really test, my thinking process with all your very, I would say, innovative questions, out of
No,
the
no.
box questions, so to speak. So shoot, go ahead.
Thank you very much. I mean, I mean, I can actually. I was thinking about what tough questions to ask you. Should I start?
Absolutely, go on.
Are
I'm
we at the
fresh in the
peak of good
morning.
news? A question which we've been pondering over last 2 days, that are we at the peak of good news? Exactly a month ago, we were at the peak of bad news. Tariff, we don't know. War, nobody knew which way it would move. FIs were selling. Rupee was down. Today, as we look at the setup, there is only good news and there is no bad news. So, are we at the peak of good news and peak of the market because of that?
Yeah, Nikunj, of course, I think a great deal of uncertainty is over and done with in this market, and soon we will have a US trade deal as well, and the US tariff also, a lot of clarity will start coming in as we go ahead. So we will get to normalcy in global markets and in Indian markets as well. But the real issue here, Nikunj, is that I'm not completely satisfied with the way this earnings season has evolved. And we have seen a lot of disappointments when it comes to the lenders. I thought banks, NBFCs would report higher and better numbers and lower provisionings, at least provisionings in line with their pre-provisioning profits, but that has not happened. And now many sectors seem to be under stress. And we only thing we can hope for is that the interest rate cuts and the tax cuts start, and a good monsoon starts to boost the economy and starts to boost consumer spending. And then we have better earnings growth as well, because at these levels or slightly higher from these levels cannot be sustained if we have this kind of slowdown or stagnancy in earnings. That is my assessment, but nonetheless, I think I'm hopeful.
So, Dipan, let's look at the setup in the market. The setup in the market is that earnings have not been great, flows have been strong. So, what does one do in this kind of a market where you know that the margin of safety is not there, but if you don't participate, I mean, you're also missing the best part of gains then.
You're right, Nikunj, and it's certainly going to test the analytical and fundamental skills of every investor. And my sense is that the markets will get more and more selective after this earnings season. So, which stocks and which sectors you pick to increase your exposure will be the key determinant of the rates of the returns that you will get 2 3 years from now. So, it's going to be a narrower market as we go along. And I think investors, fund managers will have to do a lot of heavy lifting to ensure that they are in the right stocks. And I think that's where the challenges are.
Okay. Uh, I'm just going through the list of gainers and losers. And Dipen, this whole narrative on defense now, how do you see that changing in the light of what is happening on the geopolitical front? Defense was a go-to sector, but the importance of local defense, high-tech drone manufacturing or other manufacturing now is only going to intensify. So do you think post this slumber in defense stocks which happened 3 4 months ago, defense stocks are getting ready to roar?
See, Nikunj, I think it's like a moving train. And if you're already invested in them, then it's great. I think you ride the upside. But at these levels, I think the risk doesn't favor you. And when it is out of favor, and defense was out of favor 4 5 months ago or so, and then this entire event happened, and now they are all trading at around all-time highs or so. A lot of the PSU defense stocks had corrected by 30 40%. That was the time to buy these companies. I think they've rallied significantly. So I would like to pause over here, but not sell off my existing holdings in defense stocks. And I think that investors again should be selective over here. Look for gems which have not moved up. Look for companies which will surprise you on the earnings upside, and then perhaps decide on a strategy. There could be even some hidden companies which benefit indirectly from higher defense spending. Some companies which are engaged in electronic components or similar type of supply chain to the defense companies. I think those also could be explored. But the well-known in defense counters, I think I would not like to invest at least at these levels, they are quite expensive. One should keep in mind that this business is lumpy, and order inflows and execution and quarterly earnings volatility is something, which we need to factor in, and that's not completely discounted in the stock price.
I just want to mark some stocks and then we'll talk about Bharti here. And another stock which Dipan, this one is right up your alley. I mean, you could see this head office from your old office. You want to guess which company I'll talk about? आपके ऑफिस से बिल्डिंग दिखती थी.
No, I'm sorry.
BSC.
BSC, of
Oh,
course.
your old office was at Moi Samachar Mark, right? Because that's the last time you invited me there. I don't know where the new office is, so I can't comment on it.
Yes, my new office in Nariman Point, and we can still see BSE from there. Actually, you can see BSE from many parts of South Bombay. But look, I think they've done a great job when it comes to increasing market share in the options market, which really counts. And certainly the profitability is fantastic at this point of time. This is a business which has got great operating leverage. So if the revenues go up, a lot of it flows to the bottom line. But look, at these valuations, I don't know whether you'll get great returns if you buy the stock at this value and this price. So again, wait for a correction. Also, investors need to keep in mind that exchanges like BSE, NSE, MCX, and other capital market related businesses, we saw that with CDSL as well, and some of the registrar companies, they are cyclical. And right now, I think, we are seeing an upcycle in the stock market, higher volumes and higher participation. But at some point of time, this activity also ebbs, and we see correction in their stock price and the earnings. And that's the time to buy into these companies. Look, I have full confidence in this financialization investment theme. And certainly there are a lot of interesting businesses over there. But one is to, kind of separate out the cyclical businesses from the non-cyclical ones. And I think in the entire space, our preference is for wealth managers, where there is some amount of earnings volatility. But by and large, all India's wealth managers are increasing their revenues, which are stable in nature and which are more predictable. Specifically to BSE, I think, again, same advice as defense. If you're invested, remain invested. But at these levels and at these valuations, if you take a fresh position, I'm not sure it'll give you the best returns, or at least will not outperform going forward.
It has become 7,000 in what?
3 years.
3 years.
I mean, less than 3 years actually. The first year it didn't make a move at all.
Yeah, and this whole bogey theory that, okay, there's another exchange who's a market leader, and that in a sense, BSE just went. A lot of changes have happened at BSE. Let's be very clear about it. First, change of CEO. The whole, purpose of business has been redefined in terms of the FNO. Changes of weekly expiry have really, made a lot of difference. But where I'm amazed is that that genuinely after the new SEBI rules, the FNO activity will go down and there would be a drop in volumes. But despite that drop which came in Bombay Stock Exchange, it is just charging up. And I just want to look at other brokerages also, because that same factor would be at play, because if options weekly turnover and those systems have been tightened or removed, then turnover will actually come down for a lot of other stocks. So let's look at like a 3-month change in Angel, Motilal Oswal. Which is the other one? Motilal Oswal, Angel?
GM Financial.
GM Financials, I mean, broking is not that large, but Angel would be one.
Angel would be one.
Angel would be one. Motilal Oswal, again, very high and high frequency data points. Last 3 months changes have not been great. So now before I go to Ansh and talk about telecom, Dipan, if I may encourage you to come on this part, is it a good time to buy some of these brokerage stocks which have come down because of the changes which have happened in the brokerage, brokerage activity? Because volumes are down, profits are down. Is it time to buy that bad news in a Motilal Oswal or Angel or some other brokerage stock? Dipan.
See, I would consider Motilal Oswal, although it's a brokerage, but large parts of revenues are now coming from asset management, wealth management, and portfolio management. And those fees are quite stable, and the AUM over there also is growing really well. So it's like a company which has got steady profitability coming in from businesses which are annuity in nature. And then whenever the market does well, the broking revenues and related funding revenues also start to come off quite strongly. The only issue is that there's a earnings volatility because of the investments which they have made. They have to do mark to market every quarter. But if you see beyond that mark to market provisions, I think underlying the growth is very strong and valuations also are very reasonable. So amongst the brokerages, my preference would be for Motilal Oswal. Angel also is great, no doubt about it. but it'll have more earnings volatility, and its a dependency on options volume, on futures volume is much, much higher than a Motilal Oswal.
Okay, that's Motilal Oswal for you. In the last 3 months, it's seen an uptick of about 12%. Let's bring up the 3-year chart for that one too and show you how it's performed. But Dipan believes that there's still value on the table if you were to buy it afresh right now. But
Dipan Mehta, as after this recent run-up and looking at where the market positioning is, where are you shopping? Where are you taking some chips off the table? And where are you completely inactive, assuming that you will not touch that end of your portfolio?
Well, the latter part is easy. We are completely avoiding the software services companies. And rightly so, I think, because we are not sure about the Trump policies and how it will impact US economy and what effect it will have on tech spends. Sectors we want to slightly get overweight in is in the banks, but I think in the banks it's very clear that we need to get overweight in the PSU banks. If you do a quick screener of all the bank numbers which have come through, you will realize that the PSU banks are the clear-cut winners over there, and their gap as compared to private sector banks on all parameters, whether it is NPAs or the growth in their credit growth or deposit growth, CASA ratios, they are measuring up very well to their private sector competitors. Yet valuations are pretty attractive. So within the banks, if you still have space in your portfolio, if you're not adequately exposed to banks, then PSU banks is something which one can look at certainly expanding. And then I think, select companies here and there which are engaged in concept businesses, could be recycling, could be data center, or could be platform businesses. I think no specific sector per se in which we are positive. But another sector which investors should consider is getting slightly overweight in cement as well. I mean, I'm surprised that for so many years I'm getting positive on cement, but look, the numbers are good. And eventually, I think the profitability and revenues also will go up as with the volumes for this sector. So that's where I think we are trying to playing up, strategizing for the next few months. But as I said, I think it's going to be challenging to find new stock ideas.
okay, interesting take on the markets. Dipan wanted to get your opinion as well. The much cherished stock all the way from 40 to 230, in fact 300 kind of levels. And then from there, it's just been languishing.
Yeah, that's right, Aisha. And I think first the disclosure, we and our clients are invested. And the reason for that is this competition which has come in quick commerce has just postponed the break even for that particular business. But we still remain quite positive on the company and its strategy. And I think it's right for the management to invest even more aggressively in quick commerce to gain an edge against competition. And at some point of time, I think as we saw in the food aggregation, the food delivery business, the quick commerce also will break even and start to get profitable. And that point will be the inflection point for this stock. Look, there are very few sectors and stocks which have got growth at this point of time, and Zomato is one of them. So I would remain invested in Zomato, maybe at corrections, look at buying into it. But look, stock is for the long haul, and you need to have a 5-10 year vision to be invested in Zomato. And you cannot really evaluate on a quarter or a yearly basis as well.
Okay, that's been largely consolidating in that 220 to 230 odd kind of band for a while now. Dipan, I want to get back to Bharti, and I was just looking at, while operationally, of course, things look fabulous, but the capex is extremely high for the quarter at 14,400 odd crore rupees. At 1,800 on the CMP, you think the stock is for now priced to perfection?
No, Aisha, again, the disclosure, we are invested. If you're looking for large cap stocks with growth, I think certainly Bharti fits that criteria. And even at these levels, if you're benchmarking your portfolio against the Sensex Nifty, then you should be overweight Bharti. It's one of the few rare large cap index stocks which has delivered high teens type of earnings growth for the last 10 years. I think very few businesses have been able to do that. And 17% increase in ARPU, I think, is very impressive. And still there is a way for the ARPUs or the yields to go up higher from these levels. And I think concerns around capex will gradually dissipate as it completes a large capex round. And then going forward, I think cash flows will improve even further. So I would say that this stock is certainly worth investing in. But as I said, we are invested in it, so our views could be biased.
Dipan, I want you to analyze the entire chemicals space, or rather specialty chemicals pool for us. And how do you think in these tariff times this could be an opportunity for India, and whether you like any companies here?
See, first of all, I'm at a disadvantage, and really, I feel I wish I had understood this sector better. But I think one of the few winning sectors in this earnings season are the specialty chemical companies, right from SRF to Navin Fluorine, Aether Industry. There are so many specialty chemical companies, or I would say even AP companies, which have done really well at this point of time. It's difficult to really judge what their prospects are, but tariff notwithstanding, I think they are getting into a better cycle going forward. So we should be looking for more ideas within the specialty chemical space. And what happened with UPL, I think we will see it, many other specialty chemical companies do as well. I think if you go for the larger company, the SRF and Navin, I think they should outperform and deliver good returns going forward. But if somebody understands this sector better, and it is quite technical in nature, this is certainly one sector where you can find a lot of winners, and many stocks, I think, are trading at attractive valuations, but one doesn't really know what the potential is because of the complexity of the business that they are in.
All right, so with this viewers, let's move on. Let's also get you some of the mid-cap bets and ideas from our experts. But with this, Dipan, we let you go on that. Thank you so much for taking the time out and speaking with us this morning.
If you like this video, then like, share and subscribe to ET Now.